The phone call came at 3:47 a.m. Eastern Standard Time. Military cargo planes were already wheels up from Fort Knox. Destination? Classified. Cargo, 500 million ounces of physical silver. Value at current spot prices, $14 billion. But the real value, incalculable. By sunrise, the Defense Production Act had been invoked. By noon, civilian access to strategic silver reserves was frozen indefinitely. No congressional debate. No public warning. Just executive authority and military precision. This isn't a drill. This isn't a conspiracy theory. This is happening right now. And if you think this is just about silver, you're missing the entire story. Let me take you back 48 hours before the seizure. Silver prices had been climbing steadily for months. $68 per ounce in December, $73 by mid-January. Then something unusual happened. The price jumped 11% in a single trading session. No major news, no obvious catalyst, just volume. Massive, relentless buying volume that sent every analyst scrambling for answers. Behind the scenes, the Department of Defense had been conducting quiet assessments. Silver isn't just a precious metal, it's a strategic asset. Every Tomahawk missile requires silver. Every solar panel on military installations requires silver. Every advanced electronic system, every satellite, every piece of next-generation weaponry. Silver is embedded in the infrastructure of modern warfare. And America's strategic stockpile? Critically depleted. The National Defense Stockpile, managed by the Defense Logistics Agency, once held millions of ounces. By 2020, most of it had been sold off. Budget pressures, political priorities, the assumption that global supply chains would always function smoothly. That assumption just shattered. When President Trump signed the emergency order, he invoked national security. But national security is code for something much larger. It's code for supply chain failure. It's code for geopolitical vulnerability. It's code for the recognition that America had become dangerously dependent on foreign sources for a metal that powers everything from defense systems to the coming solar revolution. The 500 million ounces, that's not new production. That's existing inventory. Private stockpiles, commercial reserves, even some bullion held by investment funds. All of it now under federal control, all of it reclassified as critical national defense material. Civilian access frozen means exactly what it sounds like. You can't buy it. You can't sell it. You can't move it across state lines without federal authorization. The metal is still technically yours on paper, but try taking physical possession. Try liquidating your position. You'll be told to wait. And that word, wait, is doing a lot of heavy lifting right now. Markets don't sleep, and news like this travels at the speed of light. London opened first. The London Bullion Market Association saw silver futures spike 12% in the opening 90 seconds. Trading halts triggered automatically. When the market reopened, the scramble intensified. Every major bank with silver exposure was suddenly trying to hedge positions they'd assumed were safe. Shanghai followed. China holds the world's largest silver production capacity. Within hours, the Chinese government issued a statement. Silver exports to the United States would be carefully reviewed for strategic implications. Translation: if America is seizing silver, China isn't selling any more of it. Tokyo, Frankfurt, Hong Kong, every major financial center experienced the same pattern. Panic buying by industrial users who suddenly realized their supply chains were at risk. Panic selling by speculators who feared government seizures might spread beyond U.S. borders. Because here's the thing nobody wants to say out loud. If the United States just nationalized 500 million ounces of silver under emergency powers, what's stopping other governments from doing the same? Mexico, the world's largest silver producer, immediately convened an emergency cabinet meeting. Peru, the second largest producer, put export controls on the table. Even Canada, America's closest ally, started floating the idea of strategic reserve requirements. Central banks were watching too. The European Central Bank released a carefully worded statement about monitoring commodity markets for systemic risks. The Bank of Japan said nothing, which in central banking language means they're deeply concerned but don't want to trigger additional panic. And then there's Russia. Moscow hasn't commented publicly, but Russian silver exports to Europe have mysteriously slowed to a trickle. Coincidence? Not likely. The message is clear. The age of free-flowing commodity markets just ended. We've entered the age of resource nationalism, and silver is ground zero. Let's talk about what 500 million ounces actually means. Global annual silver production sits at roughly 850 million ounces. So in one move, the US government just seized the equivalent of 7 months of worldwide production. 7 months. Industrial demand for silver hit a record 1 billion ounces last year. Solar panels alone consumed 160 million ounces. Electronics, another 200 million. Medical applications, automotive manufacturing, water purification systems. The modern world runs on silver in ways most people never consider. Now, subtract 500 million ounces from available supply. What happens? Basic economics. Supply drops, demand remains constant, prices explode. But there's a more dangerous dynamic at play. Futures markets operate on leverage. For every ounce of physical silver, there might be 50 ounces of paper silver being traded. Contracts, derivatives, ETFs that promise silver delivery but don't actually hold the metal. When the U.S. government freezes physical access, those paper promises become toxic. Funds that sold silver futures expecting to deliver physical metal suddenly can't. Margin calls trigger. Forced liquidations cascade through the system. We saw a preview of this in 2021 during the Wall Street bet silver squeeze. Retail investors piled into silver, physical premiums spiked to $15 over spot, and dealers simply ran out of inventory. That was organic demand from retail buyers. This is government confiscation backed by military force. The scale isn't comparable. The implications aren't comparable. And here's the truly unsettling part. The 500 million ounces seized represents only a fraction of total U.S. silver holdings. Private citizens, coin dealers, institutional investors, industrial stockpiles. The government now has a precedent. If they needed to seize more, they could. The legal framework exists. The Defense Production Act grants sweeping authority. The only question is political will. And judging by this move, political will is no longer a constraint. If this feels familiar, it should. We've been here before. April 5th, 1933. President Franklin Roosevelt signed Executive Order 6102. USEP citizens were required to surrender their gold to the Federal Reserve in exchange for paper dollars. Noncompliance carried a $10,000 fine and up to 10 years in prison. The official reason? Economic emergency. The real reason? The government needed to devalue the dollar against gold to stimulate the economy. But they couldn't devalue while citizens held gold, so they took it. 3 years later, the government raised the official gold price from $20 to $35 per ounce, a 75% devaluation. Everyone who surrendered their gold at $20 watched their purchasing power evaporate. That confiscation lasted 40 years. Americans couldn't legally own gold again until 1974. Now, let's look at wartime precedents. World War II saw comprehensive resource controls. Strategic metals were rationed. Industries were commandeered for defense production. The government didn't ask. They ordered, and failure to comply meant federal prosecution. The Cold War brought similar dynamics. Uranium, titanium, rare earth elements. Anything with military applications fell under government control when national security demanded it. But here's what makes this moment different. We're not officially at war. Congress hasn't declared a national emergency beyond the standard executive declarations that every president maintains. This is preemptive seizure. This is the government acting on the assumption that crisis is coming, not responding to crisis that's already here. That's a fundamental shift. It means the calculation has changed. It means the people making these decisions believe something worse is on the horizon, something that requires securing strategic resources now. Consequences be damned. History teaches us one other critical lesson. Governments that seize assets during emergencies rarely give them back willingly. The emergency always lasts longer than promised. The temporary measures always become permanent. Gold confiscation in 1933 was supposed to be temporary. 4 decades later, it finally ended. Will silver follow the same path? But then the numbers told a darker story. The official narrative is national defense. Stockpiling silver for military applications makes sense on the surface. But 500 million ounces? That's enough silver to build current U.S. military requirements for the next 20 years. So why the urgency? Follow the money, and a different picture emerges. The U.S. dollar is under pressure, not the kind of pressure that makes headlines, but the kind that keeps Treasury officials awake at night. BRICS nations are actively building alternative payment systems. Saudi Arabia is accepting yuan for oil sales. Even European allies are quietly diversifying away from dollar reserves. Silver, unlike gold, has something unique: industrial indispensability. You can't electrify the global economy without silver. You can't build the renewable energy infrastructure the world is demanding without massive silver consumption. It's not just a store of value. It's a critical input for the technologies that will define the next century. Now imagine you're a geopolitical strategist. You see the dollar's dominance eroding. You see commodities becoming the new currency of power. What do? You secure physical assets that the world will desperately need and can't easily replace. This isn't just about defense. This is about leverage, economic leverage, geopolitical leverage, the kind of leverage that lets you dictate terms in a world that is rapidly fragmenting into competing resource blocks. And there's another layer. Behind closed doors, something else was happening. Major financial institutions have been quietly accumulating short positions in silver for years, betting that prices would stay suppressed, betting that paper markets would continue to dominate physical realities. That strategy works beautifully until someone introduces a massive supply shock, like, say, the U.S. government seizing 500 million ounces. Those short positions, now catastrophically underwater. Banks that sold silver they didn't own are facing potential insolvency if they are forced to deliver physical metal at current prices. And who has the political connections to get bailout protection? Who has the influence to ensure their losses become taxpayer problems? The same institutions that helped orchestrate this policy in the first place. It's a pattern we've seen before. 2008 wasn't an accident. It was the predictable result of reckless leverage combined with political capture. And when the crisis hit, the people responsible got rescued while ordinary Americans lost their homes. This feels uncomfortably similar. Except this time, the asset being manipulated isn't mortgages. It's a strategic metal that underpins everything from national defense to technological advancement. So, what does this really mean for investors, for the economy, for everyday people trying to protect their savings? Let's start with the obvious. Silver prices are going higher, much higher. When governments start seizing physical assets, it sends a clear signal that scarcity is real and expected to worsen. Traders, analysts, fund managers, they're all reading the same tea leaves. And the conclusion is unavoidable, but price isn't the only concern. Availability matters more. You could have all the money in the world, but if you can't buy physical silver, the price is irrelevant. We're entering a market where premiums over spot prices could hit historic highs, where delivery delays stretch from weeks to months, where the paper price and the physical reality completely disconnect. That disconnect creates opportunity and danger simultaneously. If you hold physical silver right now, congratulations. Your position just became significantly more valuable. But if you hold silver ETFs or futures contracts that promise delivery, you're holding a claim on metal that might not exist or might not be accessible. Read the fine print on those contracts. Most have force majeure clauses, extraordinary circumstances that allow the issuer to settle in cash instead of physical delivery. Guess what qualifies as extraordinary circumstances? Government seizure of the underlying asset. You thought you owned silver. You actually own a promise, and promises break under pressure. Now let's talk about industrial implications. Every solar panel manufacturer, every electronics company, every automotive producer that relies on silver just saw their input costs spike and their supply security collapse. Margins evaporate. Production slowdowns loom. Some companies won't survive. That has cascade effects. Jobs, investment, economic growth. The green energy transition that governments worldwide have been pushing, it just got dramatically more expensive and complicated. Silver isn't optional for solar panels. It's essential. And if America is hoarding it, China and Europe will respond by hoarding whatever they can access. We're watching the formation of commodity trade blocs in real time. The globally integrated economy of the past 3 decades is fracturing. Resource nationalism is replacing free trade, and the consequences will reshape everything from inflation rates to geopolitical alliances. For individual investors, the playbook is complex. Precious metals become more attractive as hedges against currency devaluation and political instability. But physical access is the key. Paper assets denominated in silver? Increasingly questionable. Physical metal you can hold? Priceless in the truest sense. Diversification becomes critical, not just across asset classes, but across jurisdictions. Holding assets exclusively in one country, under one government's control, is now a concentration risk that can no longer be ignored. Could this trigger the next global reset? The conditions are aligning. Currency instability, resource scarcity, geopolitical fragmentation, trade wars escalating into resource wars. History suggests that when enough pressure builds in the system, something breaks, a currency crisis, a sovereign debt default, a sudden revaluation of commodity prices relative to paper money. And that's when the illusion finally cracked. The fallout is only beginning. Let's map out what happens next. Short term, we're looking at price volatility, unlike anything silver markets have experienced in modern history. Daily swings of 10, 15, 20% become normal. Trading halts become routine. Liquidity evaporates as buyers overwhelm sellers and market makers step back to reassess risk. Companies with just-in-time inventory strategies face immediate crisis. If you manufacture electronics and you were counting on regular silver deliveries, those shipments just became uncertain. Do you halt production? Do you pay massive premiums for whatever silver you can find? Do you redesign products to use less silver, a process that takes months or years? None of those options are good. All of them hurt your business. And multiply that across thousands of companies worldwide. For currencies, the implications are profound. The dollar's value isn't just about interest rates and fiscal policy. It's about resource backing, about the ability to secure critical materials for economic and military needs. If the U.S. is seizing silver because domestic production and imports can't meet demand, what does that say about American economic strength? Foreign investors notice these things. Confidence erodes, slowly at first, then rapidly. Capital flows shift. Treasury yields spike as investors demand higher returns to compensate for increased risk. The Federal Reserve faces an impossible choice. Raise rates to defend the dollar and crush the economy, or keep rates low and watch inflation accelerate. Either path leads to pain. The only question is, who bears the cost? For other commodities, silver's seizure sets a precedent. Copper, lithium, rare earth elements, anything with strategic importance is now potentially subject to government commandeering. Expect export restrictions to proliferate. Expect strategic stockpiling to intensify. Expect commodity prices across the board to reflect heightened geopolitical risk. Gold, silver's monetary cousin, becomes the immediate beneficiary. If silver can be seized, gold certainly can. That risk premium gets priced in instantly. We're likely to see gold test new all-time highs within weeks, possibly reaching $3,000 per ounce or higher. Bitcoin and cryptocurrencies enter the conversation differently now. The pitch has always been digital assets beyond government control. This moment validates that narrative for believers. If you can seize physical gold and silver, you can't seize properly secured Bitcoin. Expect capital to flow toward decentralized alternatives as the reality of government asset seizures sinks in. But cryptocurrencies bring their own risks, regulatory crackdowns, infrastructure dependencies, volatility that makes silver look stable. There are no perfect solutions, only trade-offs. For everyday citizens, the consequences hit hard. Inflation in goods that require silver, electronics, solar panels, even medical devices accelerates. The cost of the green energy transition rises sharply. Jobs in affected industries become precarious. Investment portfolios get walloped as market volatility spikes. And the psychological impact cannot be overstated. When the government can freeze access to assets you thought you owned, trust in institutions craters. When emergency powers override property rights, the social contract frays. People start making decisions based on fear rather than optimism. They hoard, they panic buy, they pull money out of banks and convert it to tangible assets. That behavior, multiplied across millions of people, becomes self-fulfilling. The crisis that governments feared and tried to prevent through seizure becomes worse because of the seizure. It's the paradox of emergency powers. They often create the very instability they aim to prevent. So where do we go from here? What does the future hold? In the next 6 months, expect the silver situation to dominate commodity market discussions. Legal challenges will emerge. Lawsuits from bullion dealers, investment funds, individual holders demanding access to their metal. The courts will decide whether the Defense Production Act's invocation was legal, whether property rights were violated, whether compensation is required. Those legal battles will take years. In the meantime, the freeze remains in effect. And every day it continues, the message becomes clearer. Property rights are subordinate to government priorities when crisis emerges. Internationally, expect retaliation and reciprocity. China doesn't forget these moves, neither does Russia. Strategic resources will become bargaining chips in a new kind of Cold War. One where control over copper mines in Chile, lithium deposits in Bolivia, and rare earth processing in China matters more than military bases or traditional geopolitics. Economic alliances will shift. Countries with resource wealth will demand better terms. Countries dependent on imports will scramble to secure supply. The power dynamics of the global economy are being rewritten, and silver is just the opening chapter. For the United States specifically, this move reveals desperation masked as strength. Strong economies don't need to seize private assets. Secure supply chains don't require military intervention. The fact that such drastic action was deemed necessary suggests that America's strategic position is far more fragile than official statements acknowledge. That fragility will be tested. Adversaries will probe for weaknesses. Allies will question reliability. Markets will demand higher risk premiums for dollar-denominated assets. The empire isn't collapsing overnight, but the cracks are visible now, and once visible, they're impossible to ignore. Technological innovation might provide partial solutions. Alternative materials that reduce silver dependency. More efficient solar panels that use less silver per watt. Recycling programs that recover silver from electronic waste more effectively. But innovation takes time, and time is the one resource that's running short. The world needs silver now for the energy transition, for electronics manufacturing, for defense systems. Substitutes and efficiency improvements might help in 5 or 10 years. They don't solve today's crisis. The most likely outcome? A prolonged period of elevated prices, restricted access, and market dysfunction. Eventually, the freeze will lift or be modified. New supply will come online from expanded mining operations. Markets will adjust to a new normal where strategic commodities trade differently than they did in the past. But the psychology will have changed permanently. Investors will never again assume that assets are truly theirs beyond government reach. Citizens will never again trust that emergency powers won't be invoked arbitrarily. The social fabric will have torn in ways that can't be easily repaired. And perhaps that's the most important consequence of all. Not the price of silver, not the reconfiguration of global commodity markets, but the erosion of trust between governments and the governed. Trust that once broken takes generations to rebuild, if it can be rebuilt at all. This isn't just a market correction. This is a warning. The world we knew, where assets were secure, where markets were free, where governments respected property rights, except in the most dire circumstances. That world is ending. Maybe it was always an illusion. Maybe the veneer of stability was thinner than we wanted to believe. Either way, the mask is off now. The rules are changing in real time. And the only question that matters is who's paying attention. Because the people who see this for what it is, who understand that silver is a symptom rather than the disease, who recognize that we're entering a fundamentally different era of resource scarcity and government control, those people have a chance to prepare, to adapt, to protect themselves and their families from what's coming. The people who ignore this, who dismiss it as temporary volatility or political theater, they're going to be blindsided when the next shoe drops. And there are many more shoes waiting to drop. 500 million ounces of silver, seized under emergency authority. Civilian access frozen indefinitely. Remember this moment, because it's the moment everything changed. The question isn't whether you should be concerned. The question is, what are you going to do about it? Stay informed, stay alert. And whatever you do, don't assume the rules will protect you when crisis comes. Because as of right now, the rules just changed. If this woke you up, hit subscribe, drop a comment with your take, and share this with everyone who needs to see it. The mainstream media won't tell you this story, so we will. This is just the beginning.